Hello, guys of FinLearn Academy and fellow traders. In the weekly recap, let's see what lies ahead in the markets. What we have seen is the decline is relentless, and also it's more of a geopolitical concern which is weighing on the markets. So volatility is likely to be there. And when we say volatility, these are huge swings intraday, 200 points on Nifty to 500, 800 points of Bank Nifty. And this is likely to stay. So let's see the structure of the market. First, we'll plot the 200-day moving average, which is key in this market because so far we are trading below the 200-day average. Let's go and check the price. So this bounce in Nifty fizzled out around the 200-day average. So the decline is there. And if I can now mark a channel, I'll remove the 200-day average. Prices are trading below that. So if I draw a channel from this high to this low, we have whipsawed the channel on twice occasion. So Monday is going to be key. If it closes below the channel gets negated. We'll have to wait for further price action. If I go to the weekly chart, let's see where the support is. And when we talk of support, you see supports are very fragile because it's an event-driven market based out of the geopolitical concerns which are weighing around the global equity markets. Nifty has breached this weekly support. It has gone below that. Next, we try to measure is the swings. From this high, here we are looking for a symmetry in terms of correction. From this high to this low was 12%. Have we corrected 12%? Let us take it from this high. I'll drop a line over there so it will be very clear. Yeah, we have also corrected 12%. So this leg is equal to this leg. And now can we mark a channel on the weekly? Yes. So now we are at a very crucial level, which is around the 12,000 correction level, which is 16,000 odd levels. Right. So we have already corrected there. But having said that, we don't have any confirmation on the daily price chart that we are reversing the trend, or we are not talking about trend. It's confirmed down on the daily as well as weekly whether we'll see a pullback or not. For us to see that, if you see Friday's price action, it was more of a spinning top. So what is a spinning top? A spinning top means the body of the candle, the tail and the wick are equidistant and all are in equal proportion. Spinning top does suggest that if it breaks the low, possibly we'll see the decline in the market continue. In that case, we can go to the next weekly support, which is origin of this move somewhere here, which comes to around 15,900 to 15,400 as the broad range. So, given the context in which market is trading and where momentum is clearly on the sell side, we do expect prices to touch down around the 16,000 odd mark, or even if it breaks that, we can see prices declining to 15,400. So traders should keep this support in mind, which was the origin of this leg up. All the minimum criteria for market to correct coincides at the 16,000 level, which is done. But you see, once we get the downside target, then we wait for a reversal. And the reversal so far has not happened. Even if there is a reversal, this gap and the 200 day 16,900 is going to be a strong resistance. So markets continue to remain in the bear grip, and Declines are likely to continue towards 16,000. If it breaks, we should see 15,500 odd levels on the downside. As a trader, take a note of it. All your trading is the volatility. In this market, right? It's a great market for FNO traders to deploy the strategies because as a FNO trader, you want wild swinging markets, and currently you have this. So just take a note till we are not crossing the 200-day moving average. Any rise will be considered only a pullback, and we should see further decline based on Friday's candle. If the low is taken out, the decline in market is likely to continue. So now let's go and check the Bank Nifty. Bank Nifty also clearly has gone below the 200-day moving average. The one-day bounce fizzled out around the 200-day moving average. Even in Bank Nifty, the 200 average still not crossed. The bias or the trend for the market will be considered down. Now, I'll remove the 200 average. Traders should keep this average in mind because it's far away. So possibly trend reversal we are not thinking about till this, because I'm getting lots of query where will we reverse the trend. Right now we are in a stage in which it's a event driven market in which market is trying to find a low. So we are not talking about any trend reversal on the upside. Let's first see a low is being confirmed or not. Right now it's just a falling market, a continuation of a downtrend in which we prepared to see further lower levels. So 200 day, I'll remove it. On the Bank Nifty, we have now come to this support level from where you had this rise. It has tested, traded there, and market have closed there on the weak note. If 34,000 is gone, possibly we should see a deeper cuts in Bank Nifty. In that case, let's again take the symmetry part of it. The decline from this high to this low was approximately 18.78, or we'll take it 19%. If I take it from this high till we don't see a reversal, we'll go with those levels. If I take around 18.75 levels and I drop a line over here, so this is like AB equals to CD, or two legs has rule of equality I am applying. In that case, Bank Nifty is showing further deeper cuts towards 32,000 odd levels, right? And the key here will be the last support or the pivot low once breached. See, you will have pullbacks or periodic intraday rallies or overnight gap up, gap down based on the geopolitical concern. But this looks to be a logical target for Bank Nifty till we don't see a reversal. So 32,000 levels on Bank Nifty and 15,900 to 15,400 in Nifty are the levels on the downside which we should be looking for till we don't get a bottom in place, or till we don't see any reversals in the market in form of that the current decline is over. So concluding the sessions, we can say market is in a continuation mode, and the continuation is in context of the downswing or the downslide, and it is likely to continue till we don't see a reversal. As a trader, we are seeing volatility. Any rise even intraday, if you see, are being sold into rather than dips being bought into. So next day, market is not able to sustain and is breaking the previous day's low. And now breaking the previous day's low can be severe decline because these bases are being breached. These are all medium-term base or support levels for the markets. Once they are breached, possibly we can see another strong leg on the downside. So as a trader, I'm prepared that yes, there is more downside in the markets currently. And for the upside, I'll wait for a reversal. Any upside is only capped towards the 200-day moving average. So we can't call it a reversal. We'll just say it's a pullback. If it happens, let's see that right now we don't have any confirmation. Right now it's showing that we are into the continuation of the decline which we are witnessing since February. So as a trader, traders be prepared for more downsides in the markets. It might not be on a Monday, or if it happens on Monday, but here on speaking about the trend part of the markets on the short to medium term, it's clearly down. See, important support levels are being tested, but after a day or two, they are being breached. So there is clearly a strong selling pressure which we are witnessing in the markets. So that's all from my side in this weekly update.